Welcome to your daily market briefing. Here are the key headlines shaping today's markets. 1. ADP employment collapses to 22K, signaling labor cooling. 2. Russia-Ukraine Abu Dhabi talks called productive as talks resume. 3. U.S.-Iran tensions flare as F-35 downs drone near carrier. After the headlines, you'll find a global market snapshot and a forward calendar of what to watch. Before we turn to today's stories, a short introduction. Daily market briefing. Think ahead, every market day. Subscribe to stay focused on what matters. Please keep in mind that all content in this video is for educational purposes only. It provides market context, not financial advice. 1. ADP employment collapses to 22K, signaling labor cooling. Primary asset classes impacted. U.S. equities, S&P 500, Russell 2000 cyclicals. U.S. Treasuries, 2Y, 10Y. Fed funds futures, DXY and USD pairs, rate-sensitive sectors. What happened? ADP private payrolls added just 22,000 jobs in January, massively missing consensus expectations of 45,000 and down from a revised 37,000 in December. Healthcare alone contributed 74,000 positions, masking broad weakness across professional services, which lost 57,000 jobs, and manufacturing, which shed 8,000. Why it matters. The dramatic labor market slowdown validates Fed easing concerns and raises soft landing questions heading into Friday's critical non-farm payrolls report. Weakness concentrated in professional services and large employers signals corporate caution despite resilient consumption data elsewhere. Markets now face binary risk into Friday. Confirmation would accelerate rate cut repricing and pressure dollar while supporting duration, whereas divergence from ADP would restore soft landing narrative. Key numbers to remember. ADP printed 22,000 versus 45,000 consensus. December revised down from 41,000 to 37,000. Healthcare added 74,000 jobs. Professional services lost 57,000. Large employers cut 18,000 positions. Fed funds futures now pricing 25% probability, March cut versus 15% pre-release. 10-year yield fell 4 basis points. What to watch next? Friday, non-farm payrolls become decisive for Fed March meeting probability and risk asset trajectory. Consensus expects 120 to 140,000 jobs. Miss below 100,000 would trigger aggressive rate cut repricing and dollar weakness. ISM Services today tests whether labor weakness extends to broader economy. Jobless claims Thursday provide real-time confirmation of hiring freeze signals, with rising claims validating deterioration narrative and setting up volatile Friday session. 2. Russia-Ukraine Abu Dhabi talks called productive as talks resume. Primary asset classes impacted. Energy complex, Brent, WTI, European natural gas, Euro per US dollar, and European FX, European equities, defense, industrials, banks. Risk sentiment globally. Ukrainian and Russian sovereign bonds. What happened? Ukraine and Russia wrapped first day of US-brokered peace talks in Abu Dhabi Wednesday, with both sides describing discussions as substantive and productive. Ukrainian negotiator Umarov stated talks focused on military and politico-military issues. President Zelensky announced a prisoner exchange expected in the near future. Negotiations resume today for second session with U.S. mediation. Why it matters. Progress toward ceasefire would fundamentally reshape European energy security, defense spending trajectories, and regional risk premia embedded since February 2022. Productive talks reduce tail risk of further escalation following Monday's massive Russian missile attack, supporting European equities and euro strength. Energy markets face potential $3 to $5 downside in Brent if ceasefire materializes, while European natural gas would see substantial pressure. Defense stocks face re-rating risk on peace dividend expectations. Key numbers to remember. First day described as substantive and productive by both Ukrainian and Russian delegations. Talks resume today for second session. Zelensky confirmed prisoner exchange expected in the near future, signaling confidence-building measures progressing alongside political discussions. Brent held $67 with $2 to $3 risk premium still embedded. European defense stocks flat awaiting clarity on ceasefire probability. What to watch next? Today's second session outcome will determine whether talks advance to concrete proposals or stall on territorial and security guarantee disputes. Breakthrough announcement would trigger immediate euro rally, Brent sell-off, and defense sector repricing. Continued productive tone without concrete progress maintains current positioning, but reduces weekend escalation risk. U.S. mediator statements on progress assessment will shape market interpretation. Monday's Russian attack creates pressure for visible de-escalation signals to validate diplomatic progress and support risk assets. 3. U.S.-Iran tensions flare as F-35 downs drone near carrier. Primary asset classes impacted: energy complex, Brent, WTI crude, defense equities, USD pairs, risk sentiment and equity volatility, VIX, shipping and insurance costs. What happened? A U.S. Navy F-35C fighter jet shot down an Iranian Shahed 139 drone that approached the USS Abraham Lincoln carrier in the Arabian Sea Tuesday. Hours later, 2 Iranian Revolutionary Guard gunboats and a drone threatened a U.S.-flagged tanker transiting the Strait of Hormuz, forcing U.S. destroyer intervention. Incidents occurred despite ongoing diplomatic backchannels. Why it matters. The escalation validates energy risk premium and threatens diplomatic efforts to ease U.S.-Iran tensions following Trump's military threats after Iranian protest crackdowns. Strait of Hormuz harassment raises shipping insurance costs and disruption concerns for 20% of global oil transit. Oil rallied nearly 2% Tuesday with Brent climbing to $67 as geopolitical uncertainty supports crude floor. Further incidents could trigger broader regional instability, affecting Gulf energy supply chains. Key numbers to remember: Brent crude gained 1.6% to $67.33. WTI rose 1.7% to $63.21. Strait of Hormuz handles 20% of global oil shipments. U.S. deployed additional F-15E strike aircraft to region. Iranian drone approached within threatening distance of USS Abraham Lincoln. F-35C intercepted approximately 500 miles off Iran coast. What to watch next? U.S.-Iran diplomatic channels remain active despite military incidents, with potential Istanbul talks through Turkish mediation being arranged. Further Strait of Hormuz harassment would escalate shipping costs and insurance premiums while supporting crude above $65 floor. De-escalation signals would remove $2 to $3 risk premium from Brent. Russia-Ukraine talks in Abu Dhabi may indirectly affect Iran calculus given regional alliance dynamics. Weekend incident risk remains elevated given carrier group positioning and Iranian rhetoric. This global market snapshot is designed for quick reference. You may pause the video to examine the data more closely. This forward calendar section is designed for quick reference. You may pause the video to examine the data more closely. Thank you for watching today's briefing. In markets, understanding the field matters as much as making the move. And that's the perspective we aim to provide. Subscribe to Daily Market Briefing and turn on notifications to stay focused on what matters. every market day.